What is up, YouTube? Welcome back to Stocks by the Numbers, and today we're taking a look at the prison sector as per request, and we're looking at CoreCivic, ticker symbol CXW, listed on the New York Stock Exchange, touch below 12 a share, and we're looking at GEO Group, a GEO, listed also on the New York Stock Exchange, stock closed today 11.34. So, should we buy one, both, or stay away from the sector as a whole? First of all, what we're seeing here, right, you switch over annually basically to any stock almost, and what we're seeing is, decent business going into this 2020 time frame, and then of course numbers start to sell off into even 2021 in some cases, and now we're starting to see a rebound middle 2022 and 2022 going into 2023, right? So almost $2 billion in revenue here, pulled back last 2 years to $186 billion, net income negative for the year. However, switch over quarterly, and as you can see, the company pulled back to about $450 million and has maintained that level, and as of last quarter jumped up to $464 million, net income positive, right? Switch over here to GEO, and we come down, and as you can see, annually, basically same thing, up to $2.5 billion in revenue. Had a pullback last 2 years down to $2.25 billion. Did remain net income positive for the year. Switch over here quarterly, and you can see end of 2021 goes net income negative, and then March, begins to rebound, goes net income positive. Revenue jumping from $550 million to almost $590 million. Here over $600 million. So, like I said, we're seeing a little bit of volatility for the last several years. Now we're starting to pull out of it, right? I don't like to discuss politics. However, we are talking about prison stocks. So when looking at prison stocks, you want prisoners, and you want them there for, I guess you could say like the majority of their sentence, right? So hearing stories, I hate to talk politics, but hearing stories about these quote-unquote blue states, places like California and New York, where, every day you have people recording other people committing crimes and whatnot, and, the police just don't show up, or even if they come and arrest someone, they'll, just let them out, 20 minutes later. So situations like that are bad for prison companies, right? That's the opposite of what you want to happen. So, just a quick look here at the facility map from California, New York. CoreCivic has facilities throughout the United States. Okay, if I was CoreCivic, I would immediately change this, right? Because I would use any other state, seriously, from Oregon to Maine, right? I would use any other states, but as of right now, as you can see, a bunch of facilities spread out across the United States, right? And we're seeing a handful in California, we're seeing a few here in New York, and you're seeing a huge chunk here in Colorado. We switch over to GEO Group. As you can see, not as many facilities. However, GEO Group also states, if we come down here, think facilities in North America, Australia, South Africa, and the United Kingdom, headquartered in Boca Raton. CXW, CoreCivic, is just the United States, to my knowledge, right? So having some international facilities might help in the long run for GEO, even though if you look at the numbers, we have, I think it's the highest incarcerated rate per capita, or, whatever the figure is. But anyway, as you can see, right, there is a handful here in California. I don't see many here in the Northeast, and I'm seeing, looks like, I believe they set up some immigration facilities down here at the southern border. And, you have basically the rest of the facilities are really down south for the most part. So, in my opinion, just based on looking at these maps and the locations of these facilities, if we're talking about the bleeding, right, on the balance sheet, the bleeding of some of these facilities that are underperforming compared to others, probably CoreCivic is probably dealing with a little bit more crap right now than GEO is. But, you know, that's just my 2 cents from the outside looking in. But I wanted to switch over here and just look at the numbers very quickly, right? If we look at the financials, we switch over here to annually, and you can see if we check our ratios, you can see, you know, this is basically maintained like a 13, 14 PE, and it's now at 12, right? So aside from a couple of years ago, this is like the lowest PE that we've seen for CoreCivic. The price to sales has, you know, again, was maintaining like almost a 1.5, maintained over 1, and had a serious pullback the last several years, and has slowly been climbing the last 2-3 years. Price to cash flow, same thing, had a pullback here, was about 7 and change, pulled back to 2, up to 4.5, now 15.5, right? So if the cash flow goes down, but the price of the stock maintains, then yes, that ratio that we're seeing is going to widen, right? It's going to largen. Price to book, just about 1, right? So we're looking at what, 11.96 a share, right? It's just about 1. So like the book value is like 11.80 for this company. So that's, you know, that's not a bad thing. And of course, excuse me, oh my goodness, coming down here, looking at the profitability ratios is something that a lot of traders and investors look at, right, when we're talking about an investment into a company. You can see the return on assets, you know, not astronomically high, but positive, maintaining, I'd say, about like that 5 to 6 level, pulls back to sub 1.5, goes negative, has a nice rebound here north of 3.5. The return on equity, same thing, you know, double digits, pulls back to single, goes negative, pops up to 9. Return on invested capital slowly sells off to negative, pops up to over 4.5. This gross margin percentage, though, maintaining this 19-20 roughly percentage area, is now sub 14%, right? That's a slight red flag. Operating margin percentage basically halved, going from the 13-14 range down to about 7.25. EBITDA, again, earnings before interest, taxes, depreciation, amortization, that maintained over 20, as high as 25%, has pulled back to about 14%. Net margin percentage, again, double digits, pulls back to single, goes negative, pops up to almost 15%, right? So a couple of red flags, but also a couple of positives to view here on CXW. If we switch over to GEO and just quickly look at these numbers, annually, we come down. As you can see, the PE is pretty high compared to historic values. Price to sales ratio, again, pulled back to sub half and is slightly climbing higher. The price to cash flow ratio, again, CXW was what, like 15? Price to cash flow 15.5. Price to cash flow 4.25. Now the book value is a little bit higher here with GEO. However, again, looking at some of these other valuation ratios, as they call them, and then switching to these profitability ratios, I would say, in my opinion, right now, just according to the numbers, GEO is doing just a slightly better, right? If we look at the return on assets, you can see maintained, didn't go negative like CXW did. The return on equity, again, pulled back to single digits and has since sold off and dropped to 6%. The return on invested capital has basically maintained, but the gross margin percentage, as you can see, made like a 10% jump, going from sub 22% up to 24%. Operating margin percentage, very similar. 12.75 percentage makes a jump up to almost 16% now. And the EBITDA, 18.75, jumps up to north of 21%, and the net margin again pulled back to sub 5, 3 and change, pops up to 5 and change. So, again, depending on how you want to look at it, there are positives and negatives for both of these companies. However, one last thing I just want to leave you guys with, just looking at the chart here, as you can see, CXW, you can see the MACD just crossed here, and that probably, in my opinion, is why we had a big pullback today, again, almost 7%. However, it's right around this mid-Bollinger Band, but the one thing I like is this bottom Bollinger Band, 1068, the 50-day moving average, 1076, the 200-day moving average, 1079, right? So we might have like a 10-15% pullback right now, But this is going to be your support range, it looks like that 1080, 1070 mark, right? So in my opinion, if we can get CXW sub $11, I think that's a decent buy. If you switch over here to weekly, again, it looks like this 200-day moving average is going to be your main support level here, 1164. If it breaks that, even on the weekly, the 50-day moving average, 1069, right? So that looks like our range, that 1060, 1070 range. So, you don't want it to break any of these supports, but if CXW can break this 1164 200-day moving average value, then we can possibly see sub 11. I would be a buyer. Switch over here to GEO on the daily. Not as much of a pullback, however, has more downside, more of a sell-off potentially, right? We have a MACD turning, just like we saw on CXW, so it could start to get ugly. You're going to have a little bit of support here, mid-Bollinger Band, 1033, however, dropping to the 50-day of 920, obviously, could be a little bit more of a percentage drop than we saw with CXW. And switching over here to the weekly, 200-day moving average 1011. This is going to be your main point, right? I would be a buyer at this level, even if it breaks 1011 and starts to pull back to like 9.5, 9 and change. It would suck that I got in a little early, but again, we looked at the numbers, we looked at the layout of the facilities. GEO is also international, so in my opinion, I think both companies are going to sell off a little bit because they just did have a run. But overall, I'm probably more of a buyer on GEO than CXW. However, we do incarcerate a lot of people here in the States, so even investing into CXW long term might not be, a very bad decision. However, again, CXW 1196, try to get it sub 11. Right, that 1060, 1070 level. Same thing with GEO, right? If we can have a pullback here to this 200-day moving average of 1011, I think that would be a phenomenal entry, right? You're saving yourself like 10, 12% on your cost basis, and you're getting in, right at a stable level of a moving average support level, right? So even if it does drop a little bit, it will most likely try to fight and get back to that level, right? So you're not buying these companies astronomically high, but could be some decent entries here in the next couple of days or even in the next couple of weeks. But yeah, I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. It means a lot to me. If you have any questions, comments, or concerns, drop it down in the comments section below. If there's anything specific you want me to look at, just leave a comment. I'll definitely put it on the board. I'll make a note of it. I will get around to it. Just like everyone on YouTube says, if you like the video, give it a thumbs up. If you like the videos, subscribe to the channel. Means a lot to me, blah, blah, blah. But again, I understand markets are rocky, they're volatile, so like I always say, moving forward, I do wish everyone success. I hope everyone makes a couple of dollars, and I'll see you guys in the next one. Have a good day.